How's it going out there? It's Thursday, September 8th. I'm Frank Curzio. It's the Wall Street Unplugged podcast where I break down the headlines and tell you what's really moving these markets. So Thursday's usually guest day, at least usually. But I want to discuss a few top tweets today that I'm receiving lots of emails about. So I'm going to bring in Daniel Research, again, senior analyst, Curzio Research, to discuss some of these. Since we've been talking about it, this conversation would be very, very good to have online. Daniel, what's going on, buddy? How's everything?
Good, Frank. Back-to-back days. How about that? Not only are Wednesdays the best days, close to being Thursdays now.
Well, at least you know that I like you, right? I wouldn't have you on 2 days off.
We're the only two in the office, so that's good, too. I got the odds in my favor when we're selecting and spinning the wheel on who's going to fill in.
I know. I'm kidding. I was looking for somebody. I couldn't find anybody else. Daniel's the only guy. Daniel, want to come on? Let's discuss it. But usually I come in. Daniel's here a little bit earlier than me. I'm like driving the kids to school. I'll go work out and come in. And he has a good, perspective of what's going on in the markets. And I'll ask him, and I'm like, really? Then I'll research it, and then we'll have like a back and forth and stuff like that. And some of those conversations get to be really cool, and I want to start trying to put them on podcast and, like this one. So, we're going to talk about crypto a little bit here because, again, lots of questions on crypto, where crypto has come down a ton, right? And we sound the alarm in the entire market. And, if the Jackson Hole that the Fed's serious about aggressively raising rates, which we're hearing by everyone that's coming out yesterday, today, all the Fed governors and presidents and board members and not board members and not voting members and stuff like that. But they all have the same tone. Like, we need to get inflation under control. It's got to happen. And we're going to significantly raise rates. But if that happens, we're already in a global recession. If they're looking to raise rates significantly, look out. And so, again, questions where you see in Bitcoin fall off, you're seeing crypto fall off, and you're seeing it fall off like every other asset class, right? It is an asset class where, it's tough, especially in even a risky market. But I want to talk about it of where, we think it's going and why we're so bullish on it, because I think sometimes it gets lost in what's really going on in the sector right now, where it could provide a tremendous buying opportunity, right?
Yeah, and we're going to talk, I think where you're going is we got to talk about BlackRock and big money and big institutions yesterday a little bit. There is some big news, a month ago, give or take, is when this news came out. Yeah, the bigger picture here for me is it's very frustrating. I have crypto investments that are down in Galaxy Digital and things. At risk of just coming across as a permabull and having your head in the sand, and I don't want to come across as ignoring the present, the bear market, the issues and the risk. However, during downtimes, during negative times, during times of fear, uncertainty, and for lack of a better word, just market crashes, when there are major events or big ticket items that are taking place or plans that are building that are still taking place during all the chaos and all the meltdowns, I think it's just as silly to ignore all of that during markets like this. And the amount of money that could potentially flow into the space off of just one asset manager opening up the dam, if you will, is just mind-boggling. And I think that if you're a crypto bear or you're an anti-crypto guy like the Peter Schiffs or anything like that, you would ought to be dancing and celebrating right now, because the present is your friend. You don't want any of these things that are being built and worked on right now to take fold, because the odds and the least resistance path is much, much higher from current levels. And I don't think it's a big surprise, or I'm not going out on a limb there saying that, but the amount of money that's going to flow into this asset class and is flowing into it is just, it's something that you can't ignore as an individual investor if you're really trying to get massive, massive life-changing gains.
Yeah, and listen, we see a lot of crap happen in crypto. I've said numerous times, 90% of the crypto companies, especially utility tokens that I looked at, are worthless. They're really worthless. With that said, if you're looking at BlackRock, right, and we talked about Fidelity announcing that they're coming in $4 trillion assets under management, probably $1 trillion retirement. They're going to open up, I think they set up a 20% allocation, even if it's like 2-3%. That's okay. You're looking at State Street, you're looking at all these companies, all the biggest fund managers in the world. And now BlackRock just signed a deal with Coinbase. And I wanted to talk about it because we all know BlackRock, and we've mentioned numerous times. We talked about even last podcast, Daniel, that has 11 trillion assets under management. Holy shit, 11 trillion assets under management. It's massive. But when you look under the hood about this announcement, which I did, and some people did, it's much bigger than that. Because they signed a partnership with BlackRock with their Aladdin platform. You're probably not familiar with it. I wasn't even that familiar with it. I heard of it. I didn't realize how big it was. This is the software platform that services over 240 clients. You'd say big deal, 240 clients. Well, those clients are Fannie Mae, the largest banks in the world, largest institutional fund managers that have a combined $22 trillion in assets under management within this system, who are now going to get access to crypto. And okay, you have access to crypto. It's another asset class, right? So when you look at that amount of money, ARK published a report, and they did a lot of, they have a lot of math behind it and everything. But again, I'm just going to tell you what they reported, who are pro-growth, pro-crypto. And they published a report showing that this news alone could push the price of Bitcoin to $200,000 to $500,000, right? Where is it? A little under 2019, whatever it is today. Based on an asset allocation between 2.5% and 6.5% of that money into crypto, right? And when you do the math, yeah, okay. But, 200,000, 500,000, let's get back to 50 first, right? Let's get back to 75. But even if we're conservative, 1% of this money goes into Bitcoin. That's $220 billion. Their market cap is now less than $400 billion. So at 2 or even 3%, the amount of money that's going to go into crypto and into Bitcoin is incredible and can push us up significantly, double, triple, pretty easily. There's a bigger point here I think you need to understand. I think everybody, and I feel like this is lost when you see this, Daniel, is that you have to ask yourself, why is BlackRock doing this? Why did JP Morgan reverse? Right? Why did Jamie Dimon say, Bitcoin, all this shit, garbage, and now they're into crypto? Why are all these asset managers reversing? It's because their clients want this. And why do they want it? Because people are like, oh, they want to speculate because Bitcoin's... No. You talked about it earlier, Daniel, what you see in crypto. This is where all the innovation is coming from. All right, so someone who's covered innovations, who's been to the Consumer Electronics Show for, how many years, over a decade, have great contacts in technology, getting in early, just so many amazing trends, right? About 5G, EVs, all this stuff, just reporting live from the Consumer Electronics Show. And again, having, being invested in a lot of these things. Whether it's data analytics, you go back even further, Internet of Things, being there when Chambers made that speech that, almost everything's going to be connected and trillions of devices or what was the number? I think he said something like, was it trillions? It was something like 25 billion. And I'm like, wait a minute, a little over 7 billion people. How's that possible? I didn't realize, and nobody realized it meant that anything that could get connected would be connected, which is what we're seeing today. Now, the point of this is, where's the innovation coming from? Okay, you're seeing extensions and you're seeing 5G get better and better and better. AI is certainly getting better and better, right? These are existing trends that are getting enhanced. When I'm talking about change the world innovation, I'm talking about DeFi, DAO, which is governance, right? You not just have a board of directors, you have everybody voting. Go look at Anderson Horowitz and they wrote a great piece on DAO. Look at NFTs. Yes, we just saw Bill Murray with a charity and they wound up stealing some of the money and someone put up that money. NFTs are great. They have to be regulated. There's a lot more to go. It's kind of like crypto in 2015, 16. Now you're seeing much more security on it. It's more secure. People don't go to Coinbase and think their money's going to get stolen anymore. NFTs is the future. NFTs is ownership. It's a ledger, digital ownership of your own content that shows that you own it. You own it forever, right? And it's on the blockchain. Nobody could change that. That is amazing. Amazing. And that's why you're seeing money pour into this. Hundreds of billions pour into this. The metaverse, right? Again, ownership of your own digital content, which is what the entire younger generation, who is 40 years old, millennials now, and younger, that's what they want. That's what they want at the internet. That's what they want. Okay, they want access to their own content, knowing that they own their own content, knowing they could sell and make royalties off of it, which you don't have right now. And a good example is I had a little rant on YouTube. YouTube, whatever. People think I'm a conservative. I'm not a conservative. I believe in capitalism. I believe in capitalism. I believe in lots of things. I do believe in climate change, where not to stupid extremes like it's whatever. But just by being a little bit, maybe, bent and whatever, our stuff doesn't get sent on YouTube. We've been doing YouTube. We have a great channel, and it doesn't really get sent. And we know it's not even out in the algorithms or anything, right? And that's on purpose. When a lot of people could be seeing our stuff and we could be helping a lot of people in terms of investments and stuff. So, you want something that's not biased, something that you own, and that's why their clients and everyone wants this. This is where the growth is coming. Think about the internet and the things that you could invest in. Now, if you look at the money coming into crypto, I always say this with Bitcoin. I don't know where Bitcoin's going. I don't even know if Bitcoin will be the crypto. Maybe it's something else. Maybe Ethereum after this, proof of work to, just the whole translate where you don't have to pay gas fees anymore. And that's supposed to happen within, right now into the next week. And it's supposed to happen for like 2.5 years. Which is a very big deal because it's very costly, right, in terms of gas fees to use transactions. And that's what everyone builds their smart contracts on. But maybe it's a different cryptocurrency. What I do know is that trillions are going to flow into this industry. trillions are going to flow into this industry. This is where the innovation comes. This is what's exciting. This is where all the big money is going into right now. And it could take a year. It could take 6 months. But, we have a lot of shit going on globally in a global recession right now, which is pretty crazy. But when you look at crypto from that point of view, saying that this is what people want, here are the biggest asset managers saying, okay, if you want it, here you go. And I have to tell you, crypto deserves an asset allocation like gold. I'm not crazy about gold, and I see gold go up a couple of days in a row, which is nice. I think the dollar's coming down. But it should have an allocation, just like uranium has it, just like your technology, speculative investments, or whatever. It should have. I think people are going to have at least a 3 to 5% allocation, not just in Bitcoin, but in different crypto investments, and you could throw fintech in there as well that are related to crypto. And that's what they're opening up to, like this asset class. And we never had that. You never had that in crypto before, right? This is all retail, and retail got leverage out the ass, and you had a couple of hedge funds and stuff like that. That's stupid shit because everyone was asleep at the wheel in terms of governance, and we're hoping the SEC finally comes out with fucking rules on this crap. All you have to do, just come on. I mean, give me a break. How long does this take? Just come out with rules. Everybody wants them. We want them. We want the regulation. Okay, we want the regulation. This way, you're going to see money absolutely surge and pour. You're seeing it right now. But that's the big news out of crypto that you need to focus on if you're into long term. You're not going to see a better growth market than this out of any single market out there right now. There's no sector and it's going to grow faster than this over the next 5 to 10 years. You're going to see a massive explosion. It's going to be difficult. We're seeing it now with the markets. It's a speculative asset. Speculative assets are getting crushed because the Fed's raising rates like idiots, even though you're seeing so many sectors get destroyed. But that's where we are with crypto. And people just, you own crypto. You're saying the market could come down. Just start picking away. And this money is going to flow in. It's going to flow into it. And when it does, you're going to see this market is not a big market right now. It's a small market within crypto. There's 2 companies that basically dominate the whole thing. Maybe 10 would account for probably 75, 80% of the whole entire market cap. This is an area where the big money is coming in, and it's going to come in fast. And I think you're going to see that over the next 3 to 6 months, and you're going to see Bitcoin rise tremendously. But you have to look at the news a little bit and not just say, well, Bitcoin's a speculative garbage asset. There's a lot more under the hood here. This is where the innovation is coming from. And everybody, and investors, especially big investors, institutions, they want to get into this. They need to get into it. And that's why they're fighting for it. And now they're getting their way with these institutional money managers deciding to partner with these big guys.
I think the biggest takeaway to your point is, why are the big companies, big institutions doing this? And it's just because your clients want it. The old saying, when the ducks are quacking, feed them. I mean, you can say whatever you want as a leader of a business or a movement or anything. When your base or when your clientele, and they can vote with their wallets, which when you're in business and you're trying to, you greedy capitalist, you're trying to generate a profit and siphon all the income out of your customers, Frank, as a right winger over there. I didn't know we were on YouTube, off YouTube for the most part in their algorithms.
No, we're on, but
no, I know what you mean about,
yeah, we have a couple thousand.
Well, that's probably more my fault on my opinion.
TikTok, it was like 6,000-7,000 immediately, and which took like a month or two just to get up to that amount, and we only have a few thousand on. Yeah, I was always wondering, I'm like, wow, we show a lot of the free stuff that people don't even. It's not free actually. It's some of the stuff that we have access to and really good charts and stuff like that. I was just surprised, and maybe it's just that we're really ugly too. It could be that.
Well, let's not get carried away. But to see the demand and the clients want to, because if you're Wall Street, if you're BlackRock, if you're JP Morgan, your clients can go elsewhere. You can go to a competitor. You lose your assets under management, you lose your fees, you lose your connections, your deals, and all that sort of thing. That is a huge positive for this movement, in my opinion. The unfortunate part is, how does that help us today? Prices, Bitcoin was dropping yesterday. It's volatile as always. That's going to continue. And you hit on this last week. I think it was last week in your Monday monologue, or Tuesday monologue, excuse me. Yes, Bitcoin is a speculative asset. I think we're going to start, and don't get me wrong, I've been late to this party. I would have already expected it to happen. But Bitcoin and crypto in general is very correlated with tech stocks, the NASDAQ, which makes sense in the early days because you have speculative money, growth, et cetera, flowing into that space. What'll be interesting to watch going forward, and again, unfortunately, this isn't today or right now, over the next year or so or longer, that disconnect between how other assets trade and how Bitcoin and or cryptos trade. I don't think you're definitely closer to the end than the beginning, with crypto kind of taking off as its own asset class. And there's a couple reasons for that. One, it's more mature. It's still very new, but it's over a decade old. It's got a lot of the anti-arguments or anti-Bitcoin arguments that have been around since the beginning are still there, but it's getting harder and harder to make that argument as to this asset class is going away. no doubt Russia's doing its thing. Everything is Russia's fault. Frank, did you see where was earlier this week that they were talking about making Bitcoin and crypto payments as part of their settlement for international trade and thing? If that's true, and don't get me wrong, it should be on their level if you put on that side of the world hat. That is the easiest thing that our government wants to see, because why, Frank? Then you can go the Elizabeth Warren route. There we go again, getting banned on YouTube. We can go that route and say, hey, this is only for criminals and bad people and, warmongers and that such. Ignore all those headlines. The main thing is that there are billions, if not trillions of dollars that will flow into this space, for lack of a better sense, because people that are in the business of making money and will make money know that that's the only thing that matters. Without an economy and without energy, you have nothing, including civilization, Frank. So this has taken off into a big one. I want to ask you something. Do you know what yesterday marked as an anniversary in Bitcoin world, Frank?
What? Yesterday,
the 7th, was the year anniversary where El Salvador made Bitcoin legal tender.
Wow, has it been that long already?
It has been that long already. A year. You can do anything for a year, a wise man once told me, Frank. Time flies. Would you guess how, although all the critics are having fun with this, because Bitcoin is down around 60% since last year, I believe. Okay? I'm just pulling this up from Cointelegraph the other day. Says it marks the first country El Salvador became the first world to adopt Bitcoin in legal tenure. Bitcoin adoption would benefit 70% of the local population, is what their president, Bukele, or however you say that, says. Except for the fact that they first started buying it when they bought 200 BC for $10.36 million, an average price of over $51,000, give or take. But the government comes out and says, rest assured, we're not wrong. We're just early. Because why, Frank? They haven't lost a dime because you don't realize it until you sell it. So it's just a paper loss at this point.
Sure?
Kind of like me and my Galaxy holdings. That's okay.
Yeah, I know.
But anyway, that's big news. Is it moving the needle? I remember this. This was announced at the Miami conference last year. Before this, when on stage they streamed the president in there. But listen, there's a ton of stuff that is going to continue and evolve in this space. It's exciting. It sucks that it's a bear market. And, I think we need the Fed to kind of slow its pace or change its rhetoric before this asset class, along with specular, takes off. But you're silly not to be participating in this, even during downtimes, in my opinion.
And look, a lot of times say, well, give the customer what they want. And I could tell you firsthand, sometimes that's not a good idea, right? If I ask my clients what they want, they're going to say, well, we want an income newsletter that's safe. And then you launch an income newsletter like we did, and you don't see sales really take off because everybody says something and wants another. Everybody wants to be a billionaire tomorrow. They want to speculate. The more money you have, the more you want to speculate. It's amazing. So, which is fine and which is cool, right? Because if someone asks you something, you give the proper answer. You don't say, shit, I want to put everything in and be a billionaire tomorrow, right? Yet that's okay if that's what you want, right? A lot of people just don't say that out loud. But when it comes to crypto, I think the big shift was it's very difficult to understand. There's a learning curve there. Now they're making it easier where now, just buying it is a lot easier where you don't have to, KYC, AML checks you still have to go through, which is, your customer and anti-laundering and stuff. But they do it much quicker where it used to take a few days. Transferring stuff to your wallet is still difficult. We need different wallets for different, depending on what exchange or platform you're trading on. So it's still difficult, but as the younger generation, and this is 40 and under, which is millennials and Gen Zs, this is what they're growing up in. This is what they're involved in. Everything digital. And when you're looking at where crypto is, I think if you look, who manages the most money? How old are these guys? They're all in their 60s. You got a few fund managers who are superstars in their 40s and 50s, like Einhorn was and Ackman and stuff like that. But still, even those guys are starting to age, which is cool. But these are people who are not familiar with this technology, right? They weren't familiar with it. And it's also the reason why you've seen so many people change, Danny. I mean, look at the legendary billionaire hedge fund managers that changed all of a sudden. I mean, you look at Druckenmiller, Mark Mobius, Bill Miller. And Bill Miller not necessarily changed too much, but he understood this thing. It was in earlier than everybody else. Soros, Ray Dalio. Ray Dalio said this is basically garbage or whatever. And now he understands it because you took the time to understand and see, the whole world is digital, right? And this is where we're going. This is the new age, the new world. And to see these guys being able to change their mind, I love it because as you get older, especially as a male, you never want to change your mind. You're set in your ways and that's it. And I promised myself I would never, ever be like that, even when I'm 99. I never want to change my ways. The reason why I was bullish 4 weeks ago, and then after Jackson Hole, I became incredibly bearish. If the data changes, you got to change. You just have to change. You can't have this stubbornness about you. It's your money, it's your life, it's your children, you got to be able to change if the facts change. Just that simple. So to see that these guys change, I applaud them. But also now they're getting a better understanding of why this is the future, why this is so big. And you can see by this crazy money printing where we have the Fed aggressively raising rates while our freaking government just launched, the student loan forgiveness for $500 billion, which is more than what TARP cost to repair the banks. And then we have the Inflation Reduction Act, the best name ever. Just whatever name it is, just say it's the exact opposite of what it does. It's so funny. But, you're spending money right now. These just came out. This is massive spending right now. For what? When we need money to come out of the system. So when you see things like that, crypto as a ledger, there's no third parties. This is outside the scope of all of this bullshit that you see in politicians and people that only care for themselves. And again, this is the whole generation up to 40. Think about 10 years, 20 years. It's going to be, pretty close to 90% plus of a digital generation. Everything's digital. And this is the age that they're growing up in. So, it's something to think about. To me, it's an enormous, massive trend, especially within NFTs, especially within the metaverse, which we're seeing a lot, which is really cool. Which will come out in a movie pretty soon. And I showed the trailer. If you guys haven't seen a trailer, I'll put it on the website. It should be on the website, but it's a really, really cool trailer. And we're going to come out with that probably in a few weeks, maybe like a month or so, putting all that together. The things that we're seeing, which is not just some garbage crap, just different sites with terrible graphics and a video game, which is what they're showing out there. It's so many different, applications and stuff. But man, what we're seeing in the metaverse, the ownership part of it is just incredible. And we want to show that to the world and show. And I think when people see it, they're going to say, holy shit, this is for real. There's a reason why there's so much money pouring into this. But, getting back to the crypto, listen, long term, I mean, I'm probably not bullish on most bullish on this sector than any other sector at these prices right now, because there is money flowing in. This is where the innovation is coming from. This is where the growth is coming from. And that's what has me excited.
When do you think more clarification or clarity, for lack of a better word, from governments will come down on the regulations and things? Do you think that's the end of the year? Or do you think it's longer than that? Because I do think two things. One, the Fed obviously is influencing all asset classes lower at this point for the most part. But two, regulation is a big deal for floodgates to continue to open and ththings like that.
I think it's going to come by the end of the year. It has to come because, one, you let it go, and now it's its own animal. So you can't regulate it. You can't stop it. You can't, if you do, the effects that you have across all these asset classes, especially now that funds are getting in it, would destroy, so many different industries, just like we saw with the credit crisis, right? Housing's coming down, and GE's like, why is GE going to zero for? What happened there? Well, they're highly leveraged too, and you didn't know about it, right? Everyone's leveraged and just... from one perspective or another, but they have to regulate it. It's just so big, intertwined with so many different things and industries right now. It really is. And some of the biggest companies, most of the biggest companies. You look at Apple, you have Square, you look at MasterCard, Visa, all these guys launching fintech around crypto. So, and the amount of money pouring in. So you're going to see it soon, and they need to regulate it. They just need to regulate what people are safe. And when you have that, that's when you're going to see, not just U.S. adoption, worldwide adoption, because you need this. Because some of these kids, they're very smart when it comes to computers and code and able to steal money and not get caught. You need to set an example here. And that's the biggest thing. You really need to see examples. So you're going to see regulation, and it's going to be good regulation. Not to the point where it hampers growth, which sometimes we see a lot when the government gets involved, but you need some kind of regulatory structure where people get in and say, okay, I know that my money is safe here. And if it gets stolen out of Coinbase, I know I'm going to get paid. Because we have Voyager, and we use that platform for one of our stock picks, and we actually invested in Voyager and made an absolute killing in it. But these guys, did the wrong thing, and they leveraged themselves in the wrong company, and now, they're screwed. And some people have their money on that platform. And I'm getting questions on it. And Voyager is doing the right thing. Voyager is like emailing their clients, and I'm on that list as well, and emailing and saying, most likely going to get the money back. Here's what we're doing. It's probably going to be in crypto or whatever, or USDT, stablecoin. That's what you need. That shows up the system. I mean, you saw Binance get hacked probably about 2-3 years ago, and they lost a lot of money. And CZ, who runs Binance, just gave all the money back and said, here you go. No, we got this. This is on us. That's what you need. You need that. Otherwise, it's going to be very hard for the masses to invest in, because people can't afford to lose $50,000, $100,000 or something if they want to be in this asset class. Or even $5,000 or $10,000. You got to make sure those assets are safe. And hopefully, I hate to say this, because very hopefully the government does the right thing, but they're going to have to. people are bitching, hedge fund managers bitching, everyone's bitching at the SEC right now saying, if it's the FTC, the FTC, we're ever going to regulate, let's get it done. Let's regulate this freaking market. Get the garbage out, determine what's a security, what's not a security, and let's go. Because you got so many different markets that are ready to grow and explode and money coming in, but you just need that framework, and hopefully it comes by the end of this year.
I hope you're right. That's not a good investing strategy or strategy at all for hope. However, I do hope you're right on the end of the year. I don't think that's the case. I would be surprised if they move that quickly, only because I have zero faith in most government agencies doing anything of merit quickly or on time. The timeline there is interesting, changing, calendars, all that kind of thing, winter. I would like to think it's closer for regulation, at least clarity between, is it going to be the SEC? Is it going to be the commodities future trading? Whoever's going to kind of oversee this. There's a couple of things going in the pipelines right now. We have the Coinbase insider trading kind of lawsuit continuing on where the SEC actually named a few cryptos as securities. Whether or not more were going to be deemed as securities is to play. I just don't think, it's hard to fathom though that BlackRock and everybody else getting involved in this. Did you see earlier this week that Access Capital, the reinsurance, is going to, and I don't know, I'm speaking a little ahead. I saw this across our briefing platform, that they are going to offer some sort of insurances to companies and crypto related with over $2 billion in revenue. That is just another data point to say, hey, this is just maturing and growing into just another asset class, to your point with all that. I don't think that Access does that. I don't think BlackRock does it. I don't think Goldman Sachs does it. Without having regulation coming down the pike, I just can't agree with this year, but I hope I'm wrong on that one, Frank.
I mean, look at who the big guys are signing up with, right? And who's consulting them and what they're doing. Coinbase, right? Regulated.
Well, and you get your revolving door around. I mean, no doubt they have
and
former SEC guys.
Right. So these are guys that know their stuff, that know that they have that protection, but they're not like BlackRock's not like, hey, we're creating our own, firm or
right.
division where it's like it's flowing through a regulated organization like Coinbase, which is regulated, right? So and you're going to see more of that. And Coinbase could be a buy off of that, even though I think almost everything on there, I'd say 85% of the things trading on there, the tokens trading are securities and should be deemed securities. And when they are, they're going to get the hell out of there because they're not going to report some of the shit, because if you see what's going on under the hood, holy shit. But that's going to open the door to security tokens and tokens that do establish it and have checks and tell you when the insiders are selling in the lockup periods and stuff that you should know as an investor, right? I mean, that's what's going to happen. But I wanted to get into...
And lastly, I think the government regulation will come down when the Federal Reserve has more of a grasp and handle on a digital currency from the Fed. So I think that's what they're waiting on. That's another reason we're not as popular on YouTube.
Yeah, Frank. I mean, that's going to take a long time because you're looking at the Fed and a bunch of old idiots in the government who don't understand math.
All I got to do, Frank, is say
They
Fed.
only understand how to make laws around
all I got to do is say Fed.
They're all lawyers. They're all lawyers. That's all they are. I mean, they don't understand growth. They don't understand the economy. They don't understand any of that crap. They're just lawyers. So, and lawyers are great. I'm not putting down lawyers, but it's, when it comes to technology and Bitcoin and stuff like that, you need people who know what they're doing and understand these markets and hire the right people, especially if you're going to have regulation around it. But I want to touch up one other topic, Daniel, which is news that I saw. And this comes out of Samsung. Samsung warned. Okay, they said the general perception earlier this year was that the second half of the year would be better than the first half. And we heard that from almost all the semiconductors and almost all companies, right? Because supply chain concerns, we saw this massive demand because 11 trillion was injected to the market, massive demand. And they were like, holy shit, it caused huge bottlenecks to supply chains. They couldn't produce things. And then the chip makers and stuff like that. And then what'd they do, right? We passed all these laws. Let's build up more chip factories to meet this massive demand, right? But people forget the 11 trillion is already spent. People got that money and they spent it, right? So now you're taking a ton of money out of the system, and a lot of these orders and things like that were pre-orders, especially for EVs. And it's amazing because Samsung's not the only one that's warning, where you saw Micron, SK Hynix, Nvidia, right? They're citing supply chain concerns for like the first time, which is not supply chain concerns, it's demand concerns. They're not going to say that. Intel and now Samsung, right? These are the biggest. Samsung is the biggest, right? They make the most chips next to Taiwan Semi, actually. And you're seeing them warn. But here's what the head of Samsung's Device Solutions Division, I'm quoting him here, and it's important for you to understand this, and I wish the Fed would freaking read a little bit and they'd understand what's going on in the markets. They said that general perception earlier this year was that the second half would be better than the first. But from April to May, 1 month, it changed drastically. I'm quoting. So he said, the world is changing so quickly. Think about that line. Because the same thing happened to retailers, Walmart and Target. They usually come out and they'll give you a warning and say, listen, sales aren't that good. Earnings aren't going to be, we're going to come low. They didn't even get a chance. And that's why their stocks fell by the largest amount, one-day drops both of them saw since the 1987 market crash. Because out of nowhere, what they did is you have all this money, massive demand, and these companies are great and figured out their supply chains and said, shit, now we got all this inventory here. It's massive. And then demand falls off a cliff. Now, what do? You have to sell it for much lower prices. Same thing happened with home builders. Listen to the home builders quarters 2 quarters ago, last quarter, and this quarter. Just go through the transcripts. You can find them anywhere. Demand, we're not seeing any drop-off. This time, we're seeing a drop-off. We're slowing down. We're cutting. That usually doesn't happen that fast. Usually you see a warning. They're not seeing the warning. It's happening immediately because that's what higher interest rates are doing right now. It's not just higher interest rates because you're raising interest rates by the highest amount in the history. Not history. I won't go to history, but since 1994. That's the last time we saw a 75 basis point hike. And we're seeing 2 of them, and people are now predicting a third one. When you have a hike of that magnitude, this is what you have in a monthly time frame where businesses can't see shit. So now you have all these supply chain concerns, and it was all, listen, we're having trouble meeting demand. So let's build like crazy because we need the supply. Now you're building. Now you're getting the supply. Demand's falling off a cliff. It's the worst scenario possible. You want to see how terrible it is, you'll see during Black Friday. Why? Because these are the chip companies, Daniel. Right? The chip companies. What do the chip companies do? Because we're going to put it in perspective. And these are for people who are looking to invest in technology and growth and stuff like that, especially the hardware companies. So smartphones, TVs, washing machines, refrigerators, laptops, LED light bulbs, thermostats, healthcare devices, smartwatches, EVs. Everything that uses sensors. Rail cars, trucks, cars, planes. You have software programs, which are high-end computers for AI, data analytics. Right? This is with semiconductors. Hundreds of them go into some of these things. Right? So in planes and cars. All smart home devices, drones. Those are all the industries that fueled growth over the past 12 years. And right now, the semiconductors, the nuts and bolts, right? These are the companies that make the parts that go into all this, are saying that we're seeing a massive slowdown. So it does make sense. People buying fewer homes, right? You have appliances and all this stuff and smart homes, right? You're going to see less of those. Price for EVs have skyrocketed to the point it barely saves you more money compared to gas vehicles as of today. They've risen tremendously with batteries and lithium and all that prices going through the roof. So people are starting to cancel these pre-sales. You have household wealth is declining. 70% of it comes from housing where prices are falling in the markets and everyone's down around 20% or more in their portfolio, meaning that they're not going to buy, or maybe not buy that, the really expensive next generation iPhone, which is, going to be exactly the same, maybe with one minor, the picture is going to be a little bit better in the camera as the one you have, right? As a 13. So, those are the nuts and bolts that's saying that demand is slowing. And what they're saying in reality is that GDP is slowing since their products go into millions of products to fuel the growth. Throwing the fact that China-U.S. tensions are increasing, China's closing tens of thousands of closing, tons of factories. Still, factories are closed for COVID. It's a clear sign. This is the sign, right? That inflation is going to ease in the months ahead, but it's also a sign that we're in a global recession, which is always determined 3 to 6 months later. We're in it right now, and we see it. China, Europe, we're in it. We're going that way, too, with higher interest rates. So just something to think about. I thought that was pretty big news, considering the Fed sees no signs of inflation slowing and everything's cool, even though everything we buy electronically, the people who make them are all warning. They're all starting to warn. Not every semiconductor. Broadcom was okay. We have one on our portfolio. There's a few of them. But a lot of them are starting to warn about these orders, which I think is significant. And it's not getting enough coverage.
Absolutely. And you can't, listen, it's not, you never want to have the same strategy all the time. There's a time to be on offense. There's a time to be on defense. To your bigger point, the reality is, not to say anything that's not crystal clear right now, hey, markets are in a tough bear market. Stocks, everything is waiting on the Fed. Speculative assets like crypto and things have gotten hurt. There's nothing wrong with being defensive here and paying attention to this. And you're right, this isn't getting that much news that you and I think it should. We read this as a line. As just news passing. And a lot of times you can get caught up in that. You're so, whether you're looking at news or, whatever view you share or what side, it can become numb to you. And you think, oh, wow, look at this. A big Samsung just warned. Is that a big deal? Yes, it's a big deal. It's a very big deal. When you look under the hood. And that's what you want to do.
When you look under the hood, it's a big deal. It's
exactly.
not just like Samsung, your typical company that's warning.
Right.
On top of that with Micron and NVIDIA and all these other companies, it's you're seeing that, wow, they all said that, every one of them, if you go to Q1, said second half is going to be freaking blockbuster. We're going to kill it. Yep. Our supply chains are easing now. We're going to get things back online. Demand fell off a cliff, and now you're sitting on massive supply. So when you go Black Friday, don't buy anything. Don't buy your TVs, because Black Friday, cameras, wait. You are going to see the greatest deals you've seen probably in 10 years. Seriously, you're going to be able to buy 70-inch TVs for less than $500. It's going to be insane. That's how much inventory these companies have right now. And then they're trying to hide it and not going to be able to hide it, but you're seeing it at earnings. It's why earnings are getting lowered. That's why they're lowering their earnings and their guidance themselves. Even though they say 70% of these companies, Dan, right now are beating analyst estimates. It's because they're being lower significantly.
Right.
And I covered that the other day too, with earnings coming down. So, just be careful. And there are ideas out there. You have a couple of ideas. One idea that I have, let's go over your idea. So one of the ideas that you could believe how cheap it is right now, right?
Well, just one of the favorite whipping boys for Wall Street is Altria Group, MO. And if you pull up a stock there, it's the chart it's fallen down. It's come back a little bit off its previous lows. You could argue maybe it got run up a little bit more, but it's a great dividend stock. It's a sin stock, tobaccos. But they did just settle a massive lawsuit. Well, they haven't settled it completely yet, but the Wall Street Journal reported, I believe yesterday, that Juul, the e-cigarette vaping section that Altria bought. Frank, do you remember? I think they bought it for $35 or $38 billion.
They took a massive stake in it, yeah.
And they wrote it down to, I think, under $2 billion now.
Which is incredible.
But this is the Wall Street Journal reported this week that Juul Labs agreed to pay at least $438.5 million to settle. And basically what they were accused of is marketing and making e-cigarettes and vaping cigarettes flavored and looking cool to younger teenagers. And it caused a pandemic of just underage smoking and things like that. To Altria's point, they're arguing that the FDA, now they're all settling this. Frank, these payments are payable over 6 to 10 years. The longer Altria takes to pay them, the higher the fine. So if they pay it all, it's going to be $438.5. If they take the longest time, it's like $470 and change. Do you have any idea how much revenue Juul made in last year, Frank?
How much?
So they're paying $400 million.
Mm-hmm. I'm curious.
It says Juul, which had more than $1 billion in sales last year, but that slipped to number 2 in the market. So their competitor has taken them over. Now the FDA banned their products. Then Juul and Altria had to sue them. They got that lifted while they still discuss certain things. But get this. This also includes they raised the age of buying tobacco to 21. $1 billion in sales, so you can do that's 40%. Frank, if you get fined 40% of your total income, you're going to keep doing that, especially when you can stretch it out over a 10-year period. Not to mention the tax offs and all that kind of thing. Now, we're not advocating for young children to smoke here. We're just simply pointing out the funny and irony here. But yeah, so if you think about, hey, how can you play defensive? One of the most hated stocks, the stock chart is it's off its previous lows. It pays a great dividend.
What's the dividend these days? Man, that's freaking high.
I don't know at current price. It's got to be 4 or 5%, wouldn't you think?
Higher than that.
Do you have FinViz up or Seeking Alpha?
I think it's even higher than that. Let's see. When it comes to Altria, so yeah, it's probably higher than that. But yeah, I mean, you're right. I mean, it's a stock.
Oh yeah, it's according to Seeking Alpha at current prices, it's a little over 8%.
Yeah, it's really high. I knew it was pretty high up there. So yeah, wow, 8%. And that's payable through cash flow, too. So it's not like, holy cow, you need to worry about 8% dividend. I mean, they got the cash flow and stuff like that. So so the stock that I like, guys, I think news came out, too, is a little under the radar, is IMAX. I purchased IMAX now. So they had like a $50 million buyback. They increased it to $225 million. They have like $800 million, a little over that market cap. So they plan on buying back 30% of its stock, right, which is insane. And if you look at the movies coming out, too, it's for the rest of the year, it's going to be pretty cool. They got a good slate. The Avatar movie's coming out, which is going to be $1 billion movie probably, worldwide. I think there's a DC League movie coming out. And there's about 4 or 5 more blockbusters, but IMAX, all these blockbusters get shown in their IMAX theaters, and we're not talking about 3D theaters. Some of them are, but just the sound quality and everything. When you go to IMAX and see a movie in IMAX theater, it's a different experience. I mean, when I go to a theater and I see a movie, it's pretty cool, but you can get that in surround sound. If you have a good surround sound system with, good speakers and stuff, you can get that, right? And you can get, especially with the TVs today and how beautiful they are, if you put them in the right spot. I love doing shit like this. But IMAX, you don't have that experience. You don't have the IMAX experience of how they're shooting with their IMAX cameras, or how it's just, that sound in there it's just different. The movie's different. And that's why these guys kill it every time there's a blockbuster movie coming out. But, we just saw like Tom Cruise and a lot of these movies generated a shitload of money. They got like 3 or 4 coming out on slate for the rest of the year. And they're buying back all of this stock. They know that they're doing great in earnings, and that's a stock that's fallen. But, you are going to see people go to the movies. It's not the most expensive thing in the world, even though popcorn's like $50 these days to get. Maybe it's a little less than that, but you guys get my point. But when you're looking at so many other things, or a baseball game and $10, $12 of beer and stuff like that, and tickets and fees on the tickets, which cost more than the ticket itself these days, it's not that bad to take your family to a movie compared to alternative things. And that company's just riding high, good company, good balance sheet, and man, buying back a lot of their stock, which you want to see, which should put a floor under it, even in shitty market conditions, because it has gotten hit along with everything else. So.
I like that, and that'll be a good test to just pay attention to the consumer. Frank, I have never been to an IMAX theater.
It's really cool.
I have not watched a movie. I'm not a big movie guy.
Really cool. No, IMAX theaters are really cool, man. So
I did watch Top Gun though the other day.
Did you like it?
Yeah,
it was really good.
It was good. It was entertaining. Yeah,
it was a good movie.
It's it's something to let your. They go well with alcoholic beverages.
Yeah, like everything, right? Like everything. All right, guys. So a couple of ideas there. Crypto, we're getting a lot of questions on, and also just, be careful. Every industry is seeing it one by one. It's retailers, it's home builders. Now it's semiconductors, all saying the same thing, right? They're saying that, holy shit, this happened so fast, the slowdown. Like something they didn't prepare for and they didn't see coming. That's what happens when you raise rates by this amount that quickly. And I'm telling you, the last interest rate hike is not even factored in yet, and they want to go another 75 basis point hike. They can go 75 basis point hike next. They have to ease their tone. They don't have to say they're lowering rates, but if the Fed comes out with the same rate that they're talking about now, and that same tone where we're going to do whatever it takes, and inflation's much higher, there's no reason to own stocks. We're in a global recession right now. They're not seeing growth from any country, and the Fed has the power right now. It's up to the Fed. The Fed can either cause a recession. It's like, all right, we're in a recession, but it's up to them whether it's going to be mild or if it's going to be a depression. It's up to them, and let's see what they do coming. Hopefully, they're looking at the right data and listening to the right people, because right now, every single one of them is on the wrong side of this trade, just like they were on the wrong side saying inflation was going to be transitory, and that's what scares the hell out of me. So, yeah, let's see what happens. We're here for you at questions, comments, frankcurzioresearch.com. Daniel
at curzioresearch.com.
All right, guys, have a great weekend, and I'll see you next week. Take care.